Hello and welcome. You're watching BTTV or Business Today Television. I'm Sakshi Batra, and this is a special on Dussehra. The festival of Dussehra really symbolizes the victory of good over evil. And this Dussehra, we at BTTV urge our viewers to really destroy all their financial evils which are there on the wealth creation journey. Now, how do we do that is what going to be our focus today. Joining in is a very special guest with me, Mr. Vineet Patawari joins in. He's the co-founder and CEO of StockEdge and Elearnmarkets. So welcome, Vineet, and thank you so much for taking the time out. And here's wishing you a very happy Dussehra.
Thank you so much, Sakshi, for having me here. Very, very delighted to be here, and happy Dussehra to you and all the audience who's watching today.
Well, thank you so much for all those wishes. Well, like we always say that, Dussehra is the time to really overcome all your evils that are in our lives as well. So financially speaking, again, there are many people who commit financial mistakes in their daily lives, and that's what we want to cater to in today's trading session. Help us understand, and all our viewers too, how about taking a new and a fresh perspective at the finances in a whole new way this Dussehra, and how does one go about it?
Since you started on a mythological note, I would add that, all the evils are in lack of awareness. So the first thing we should do regarding our finances, our wealth, is try and understand your net worth, right? For that, you might have to get into calculations and see what's there on your asset sides and what's there on your liability sides. So reduce your liabilities and increase your assets. And we can delve deeper into it, and it can take hours and hours. So I'll go very specific and over to you for your questions.
But that's a great way to begin, cut down on your liabilities and build on your assets. That could be a great start this Dussehra as you, conquer the financial vices in your lives as well. So one of the, evils that we often talk about is, financially speaking, is debt. Or being in a debt trap. Now, first, help all our viewers really understand what exactly is a debt trap and how can one really avoid it?
See, we need to understand why debt is an evil and when it is not an evil.
Yeah.
Okay. So debt is basically, people say that power of compounding is the eighth wonder of the world. Because when it works in your favor, right, it increases your wealth tremendously if you give it time. So time is all it needs, and you keep saving, investing, and the money grows into a huge amount because you have given it time. So that's power of compounding. It starts working in against you when you take a loan, because here you are paying interest. It's exactly the opposite of creating wealth. Correct. And this keeps accumulating. Just to give you an example, let's say if you have taken a loan of 70 lakhs and you paid it in 15 years, at the rate of 12%, right? Your EMI will come to around 77,000 rupees.
Okay.
Just a small step of increasing the EMI from 77,000 to 84,000. That's another addition of 7,000 per month.
Right.
Can use the entire time frame by 5 years. You can pay your loan faster by 5 years. All right. Such a small step. So you need to understand that the power of compounding is huge, both sides. And by understanding debt properly, you need to avoid this working against you. And debt trap, basically, as you asked, debt trap is when this starts working against you. To pay one loan, you have to take another loan.
Yes.
Or at times, you don't even understand how many loans are working against you.
Right.
Because if you have taken a proper loan, you feel it's a loan. But a credit card balance is also a loan. Yeah. So there are so many loans which we can discuss.
Exactly. And that's what I was coming to, Vineet, that how can one really avoid being in debt? Because today we are seeing that there are many easier ways to get into a debt or, borrow money. It's not just the banks. You have fintechs, you have credit cards, you have zero EMI culture that all around us, they prompt us to remain in debt through and through. So how can one really deal with all of this?
See, I feel the problem is the lack of awareness. There are certain loans which people take and they don't even understand it's a loan. Let me give you an example. There is this BNPL, buy now, pay later.
Absolutely, yes.
Right. And it says 150 rupees off if you get into this. So by this 150 rupees off, you are falling into a debt trap. You are getting into a debt, right? And this is becoming so obvious that people don't even look, they feel there is an advantage, but this is a big disadvantage because there is always the interest component, which you cannot see when you look at it. Initially, this might come easy, but later on, when it gets piling up, the component of your salary which gets going out to service these debts is huge, because your credit card is there. You will have buy now, pay later. You will have things like your home EMI. So these all keep accumulating. So you need to make sure that your salary or your income, only a fixed percentage of it can go into paying off all these loans put together, not more than that. And people recommend this should be around 30%.
Okay, only 30% of our every month's salary should actually be going towards servicing of debt. Not more than that. If you're actually incurring much more, then that means you're getting into a debt trap, and that's where you should get aware about excessive debt coming into your book. So that's something which is a very big tip that you've given us. That 30% of your salary, and an easy calculation. Everybody can then understand that how much money is going out of their pockets just to service the debt as well. So now help me understand. You also pointed out that there is good debt and then there is bad debt. So what is the difference between the two, and how does one identify which one is in good and which one is bad?
That's a very good question, and I'll try to answer it from the first thing where we started: assets and liabilities. So the loans which helps you build your assets or increase your net worth, those are good loans. All right. For example, you purchased a home and you are paying home loan EMI.
Yes.
It's a good loan, right? Because an asset is getting built up, which is an appreciable asset. The value of it is getting appreciated year by year. Right? Whereas, let's say you bought a car, which is a depreciating asset. It's a bad loan because it's an expenditure. The value of the car goes down 30% the day it gets out of the showroom, right? And it keeps going down. So any loan which is on the depreciating assets is reducing your net worth, and it's a bad loan. Any asset which is increasing your assets, whether it's a business loan or a working capital loan, all those loans are good if it's at a reasonable rate of interest, right? So that'll be my short answer to this question.
Absolutely. So that clarifies a lot of things. If you have taken a loan to build your asset that adds on to the value, then it's a good one. But otherwise, if you put that money in just buying something which is depreciating in value, that could be considered as a bad debt. So see in your lives how much so what should be the balance ideally? I know that, it's not possible for one to not borrow loans for even those liabilities. Like car is a necessary in today's trading in today's life as well. So those kind of debt one cannot really avoid. So how to ensure that there is a balance between good debt and bad debt?
Yeah, so to strike that balance between good debt and bad debt, what you need to do is you need to see what are the essential elements of your life. For example, if travel by car is the absolute necessity for you, given your work life, given your style, etc., then you should take a car loan, right? Because it's essential for to maintain your lifestyle. But let's say you have a very good public transport in your city and you can avoid a car loan till the point you have some savings which can go towards paying for your car at a go, right? It's always better to go for a down payment and buy the car if you can defer the purchase. Similarly, for a washing machine, similarly for a TV, for a marriage, for a holiday, anything which can be deferred, first rule, defer it. If you can't defer it, if it's essential, buy it, but then make sure that the rate of interest is very, very competitive. Look at multiple lenders and find out the one which can give you at a very good rate.
Okay, understood that. Now, there's also a situation where, you take loans for multiple years, especially for home loan. One gets or remains in debt for a fairly long time, 20 years plus and 25, 30 years. How does one really ensure that they can pay off the debt faster in case they follow this trick that you've suggested that, invest some more money in building into an asset which can reduce your overall tenure of being in debt? So how does one do that?
See, there are two factors to be seen here. If your rate of interest, especially for home loan in India, it's now available at 7%, 7.5%. It's very competitive rate. And if you are doing a business or any investments which can generate more than 7%, you need not reduce your home loan because it will also give you tax advantage over the period of the loan. That's number one. Number two, if you are in a job wherein you don't have an avenue to create returns of more than 7.5% for which you have taken home loan, you should pay it faster, because anyways, it's a loan, right? You should pay it faster. To do that, there are a couple of things which you can do. One, every year with the increase in your earnings, increase in your salary, try to top up the amount you are paying as EMI. So like in the example I gave at the beginning of the show, 77,000, let's say if you are giving as EMI, next year try to add 7,000, because your salary must have also gone up by 10%. So increase a 10% in your, and this will reduce the tenure by a substantial period, right?
Okay.
So that is one. Number two, if you have some lump sum earning, you got a bonus, right? You pay a extra EMI or pay a couple of extra EMIs. You will see this will also have enormous impact on the tenure of your loan. So you can get out of the loan faster out of these 2-3 ways if you follow it properly.
Okay, understood that. So I hope all our viewers are noting these down. These are very, very important tips that can actually help you reduce the number of years in which you remain in debt, pay your debt faster, and get stress-free faster as well. Let's also now come to, you must have, spoken to so many people who come to you for advice. What are the common financial mistakes that you've come across that people make, and all the viewers can benefit by listening to you? What should one really get rid of this Dussehra?
Yeah. So one thing which you should definitely get rid of is the ignorance about your personal financial wealth, right? You should understand and be well aware. In fact, it should be in an Excel where you do all the calculations. You sit down, just write down what are the assets you have, right? What are the liabilities or the loans, debts you need to pay. Try and calculate a fair net worth calculation. If need be, take help of a personal financial expert. That's number one. Number two, when you are aware, right, try to see if you have spread too thin in terms of, let's say, having multiple accounts. People have 3, 4, 5, 6 bank accounts, multiple credit cards, multiple loans running. Try and consolidate all of that, because it's too difficult to manage so many things going parallelly.
And right? You might end up missing some of the other due that you may not even come to know about it. And Absolutely. Then you have added on interest.
Just one credit card payment, if you don't do in time, apart from the financial, 1,000 or 2,000 rupees of penalty which will be imposed, interest rate which will be imposed, your CIBIL score also get disturbed, which makes your credit in the future expensive. If I am getting it at 7%, you will get it at 7.5%, right? Which makes a big difference, right? So try to be very, very aware of all this. Set proper alarming system in your thing that you don't miss on any of these payment of credit cards, EMI of your loan, whatever loans are running, right? So try and consolidate. 1 or 2 bank accounts are good enough. 1 credit card is good enough. 1 debit card is good enough. So, so that is another thing I'll say. And the third one is pay your loans and credits as fast as possible with as severe intensity as possible. Do good savings and pay back your loans, so that investing life cycle starts.
Okay, pay back your loans so that your investing journey can start. That can actually help you build good assets over time. Very, very interesting tips being given by Vineet right here. And I hope that all of you are really noting it down for yourselves, because this is really going to help you financially in future as well. And last question to you, Vineet, I want to understand from you, since we're talking about Dussehra and there is a lot of talk of Ramayana this time. Help me with any one financial planning lesson that you picked from or acquired from Ramayana in your life.
That's very interesting. I haven't thought of it, but what I would suggest is, see, it takes time. It takes time. Ram went for Banwas. It took 14 years. So people say, there is a very, very interesting saying that when he went to Banwas, he was a king, right? Or a prince. When he came back after 14 years, he became Lord Ram. So, right. So this journey from a simple prince to Lord Ram, who is worshipped every year, it took 14 years. So no investing can be done in one day. So give it time, be patient, and your wealth will grow significantly.
Okay, have patience and the wealth will grow and you will get returns. That's the key that you need to imbibe from the as a financial lesson from Ramayana this time. Thank you so much, Vineet. Great speaking to you as is always. And thank you for helping all our viewers really understand, what financial vices to avoid to overcome this Dussehra and where should be the direction in which they should move going forward for a healthier and financially well lifestyle.
Thank you so much, Sakshi, for your time. Thank you.
If you like the video, do like, comment, share and subscribe.